This trendline technique is the fastest and easiest way I think I've ever used to make money while trading. And the framework that I use gets insane results for traders, expert or beginner. So now I'm going to break down every step for you so you can just copy it. First off, what is a trend line? Put simply, a trend line is a straight line drawn on a price chart that connects two or more price points, typically significant highs or lows, to indicate the general direction of the chart. It helps traders visualize trends and identify potential support and resistance levels. So it's only right that the strategy I'm about to show you revolves around the trend line. You never want to complicate it with indicators or whatever else. I only use support and resistance as secondary confirmation to strengthen my trading decisions. Now I'm going to show you an example of this when going long. So as you can see, the chart touches the line multiple times, at least 3 times. It shows that it's in a downtrend. I like this because if it reveres, it's going to be strong. Look what happens when the price breaks this trend line. This is where I place my order, and as you can see, it's a winning trade. I don't set a fixed take profit. Instead, I ride the trend until the price breaks the trend line, which signals that the trend has ended. This could go on for hours in this case, or minutes, it really just depends. That's why you want to keep your take profit flexible. Let's take a look at another example. As we see again, the price touches the line at least 3 times, 4 in this case, so it's clear the stock is in an uptrend. I wait for the trend to be broken like it was right here. Then place an order and wait to see what the price does. Very simple, straightforward. Now let's flip the script and take a look at a short position. Here, the price touches the trend line at least 5 times. So it's very obvious the chart is in an uptrend. You wait for the price to break this trend, then what do? Exactly, that's when you determine your entry. So, as you can see, if you've been following along so far, your entry short would look something like this. Do you set a determined stop loss? That's right. You don't. In this case, the short went on for about 2 weeks, which was awesome. So this strategy is all about the trend line, which determines both my entries and exits. The aim is to capture most of the price move by staying in as long as the trend holds. And you only exit when the trend shows signs of reversing. If you try this method, remember that it relies on clear, consistent chart patterns. If the trend line holds, you stay in the trade. If it breaks, you exit. And here are some advanced tips you need to keep in mind. As price moves, your trend lines will be crossed, so it's important to continuously adjust them using new points to reflect the current market, whether that means drawing steeper lines or shifting to new highs or lows. You should always use top-down analysis by incorporating multiple time frames. Start with a higher time frame to understand the overall trend, then narrow it down to the time frame you plan to trade. Finally, use support and resistance areas as take-profit zones. This helps if you're not holding trades long-term or if you're aiming for quicker, gradual gains. Very simple. That's my strategy in a nutshell. Hope you learned something. Check out this video next.